Kaspa is sitting at 4.8 cents, and while everyone's busy panicking about short-term price action, something absolutely wild is happening behind the scenes. A mystery wallet just added another 2.8 million KAS. Nearly $10 million in shorts are about to get liquidated, and 720 new whales quietly accumulated during the chaos. Meanwhile, one analyst is calling for a $3 price target by 2027, and his track record is, scary good. So, is Kaspa actually setting up for the breakout of the decade, or are we watching another overhyped Layer 1 fade into irrelevance? Buckle up, because this gets interesting fast. What's up everyone? Welcome back to the channel. If you're new here, smash that subscribe button and hit the notification bell because we're diving deep into the projects Wall Street doesn't want you watching, and if this analysis brings you value, drop a like. It genuinely helps us reach more people in the crypto community. Alright, let's get into it. Kaspa has been through the ringer since mid-2024. After hitting an all-time high of 20 cents, KAS crashed down to about 4.8 cents, a brutal 75% drawdown that had investors questioning everything. Many expected explosive momentum by now, especially with all the noise surrounding its technology. Instead, we got months of sideways chop and relentless FUD. But, here's what most people miss. The quiet phases in crypto are often where the biggest setups form. While everyone's attention shifted to the next shiny memecoin, Kaspa kept building, the network kept growing, and the smart money, they kept accumulating. According to Kaspa Daily, users have collectively withdrawn around 100 million KS from MEXC since late October. That's not panic selling. That's people moving coins off exchanges into cold storage, self-custody, long-term conviction. Gate.io even confirmed they're not the owner of wallet number 1, the address holding the most Kaspa supply. That mystery accumulator just added another 2.8 million KS, and they're not stopping. When whales accumulate during fear, retail investors should pay attention. Nearly $10 million worth of Kaspa shorts are sitting dangerously close to liquidation. If KAS pushes above 5.5 cents, those positions get wiped out, and we all know what happens when shorts get liquidated. Spoiler alert, it rhymes with short squeeze. During recent market volatility, 720 new addresses crossed the 100,000 KAS threshold. Think about that. While prices fluctuated and Twitter melted down, mid-tier holders were quietly loading their bags. That's not fear, that's conviction. And it gets even more interesting. Kaspa now has 699 public nodes live, a massive jump in network decentralization. Each new node means better security, faster propagation speeds, and stronger trustless infrastructure. This isn't just price speculation anymore. It's infrastructure expansion. The community is building for the long haul, not chasing quick flips. When networks grow their validator base during bear markets, that's historically been a bullish signal. Ethereum did it. Solana did it. And now Kaspa's doing it. So what makes Kaspa different from the 47 other Layer 1 projects promising to be the Ethereum killer? 2 words. GHOSTDAG protocol. While most blockchains are like one-lane roads that clog up during rush hour, Kaspa built a multi-lane highway. Traditional blockchains process blocks sequentially. One block finishes, then the next one starts. GHOSTDAG allows multiple blocks to be confirmed simultaneously. The result? Kaspa processes one block every single second without sacrificing decentralization. That's faster than Bitcoin, faster than Litecoin, and competitive with many proof-of-stake networks, except Kaspa's still proof of work. In my opinion, this is where Kaspa's value proposition gets seriously underrated. Ethereum struggled for years trying to balance decentralization with throughput. Many newer Layer 1s achieved speed by sacrificing decentralization. Hello, centralized validator sets. Kaspa cracked the code on maintaining both. For a proof-of-work chain in 2025, that's borderline revolutionary. While everyone's obsessed with proof-of-stake, Kaspa's proving you can innovate within proof-of-work systems without compromising security or censorship resistance. Now let's talk about Lovrin, the analyst driving fresh attention to Kaspa. Known online as Lovrin Crypto, this guy has built a reputation for spotting momentum before projects explode. His latest threat on KAS is getting serious traction, and for good reason. According to Lovrin, Kaspa shows the same accumulation pattern that appeared in early phases of Solana and Polygon before their massive runs. He points to solid fundamentals, consistent market activity, and strong positioning on major exchanges like Kraken. But here's the kicker. He's calling for a $3 price target by 2027. Let me give you my take on that. A move from 5 cents to $3 would be a 60 times gain. Ambitious? Absolutely. Impossible. Not even close. Solana went from $1.50 to $260. Polygon went from 3 cents to nearly $3. These weren't overnight miracles. They were multi-year accumulation phases followed by explosive breakouts when market conditions aligned. Lovrin's argument rests on measurable data transaction speed, scalability, advantages, expanding network capacity, and rising developer interest. This isn't hopium, it's pattern recognition based on how previous Layer 1 winners behaved before they popped. What I find particularly compelling is the slow, steady accumulation Lovrin keeps highlighting. Large investors don't build positions overnight. They accumulate quietly over months, sometimes even years, without moving the price dramatically. That's exactly what we're seeing with Kaspa right now. Wallet number 1 keeps adding millions of KAS. Exchange withdrawals keep climbing. Mid-tier holders keep crossing the 100,000 threshold. This behavior honestly just screams institutional level positioning, not retail FOMO. Here's my honest assessment. Kaspa's current stage mirrors how successful networks looked before mainstream attention arrived. The development team continues improving network efficiency and stability, working toward features that could attract more developers and enterprises. If that progress continues while the broader crypto market turns bullish again, KAS could enter a parabolic growth phase. The technology is real, the network is growing, the fundamentals are solid. The only question is timing. For long-term believers, the current price zone around 4.8 cents represents a crucial opportunity. It's 75% down from the all-time high, but backed by ongoing activity that proves the project hasn't lost momentum. Remember, the best buying opportunities in crypto rarely feel comfortable. They happen when everyone's fearful, when charts look ugly, and when Twitter threads get ratioed by bears. That's exactly where Kaspa sits today. But let's be realistic about risks. Lovrin's $3 target by 2027 assumes several factors align perfectly: continued network growth, sustained developer interest, favorable macro conditions, and broader crypto market recovery. Any of those variables could shift. Regulatory crackdowns could slow momentum. Competing Layer 1 projects could steal mindshare. Macro headwinds could extend the bear market. Crypto is a high-risk, high-reward game and nothing is guaranteed. That said, risk-adjusted upside looks incredibly attractive here. If Kaspa reaches even half of Lovrin's target, let's say $1.50, that's still a 30 times return from current levels. Even a more conservative scenario, where KAS reclaims its previous all-time high of 20 cents, would deliver a 4 times gain. The asymmetric upside is hard to ignore, especially for a project with legitimate technology and growing infrastructure. What separates Kaspa from vaporware projects is simple: real usage, real development, and real network growth. The team isn't focused on marketing theatrics or celebrity endorsements. They're building a scalable, decentralized proof-of-work chain that solves actual problems. In a space crowded with hype and empty promises, that approach feels refreshingly authentic. One final thought from me: markets reward patience more than they reward panic. Kaspa's price might chop sideways for months, it might even drop lower before finding a bottom, but if the fundamentals continue improving, if nodes keep increasing, if developers keep building, if accumulation keeps accelerating, then price eventually catches up to value. That's not hopium, that's how markets work. So there you have it. Kaspa's sitting at a fascinating crossroads. Mystery whales accumulating millions, shorts dangerously close to liquidation, network decentralization accelerating, and an analyst with a solid track record calling for 60 times gains by 2027. Whether you agree with Lovrin's timeline or not, one thing's undeniable: something's brewing beneath the surface. If this breakdown added value, hit that like button and share it with someone who's sleeping on Kaspa. And hey, if you want more deep dives into undervalued projects before they explode, check out my other videos. We cover everything from Layer 1s to DeFi protocols that Wall Street hasn't discovered yet. Thanks for watching, and I'll catch you in the next one. Stay sharp out there. Quick reminder: nothing in this video is financial advice. Cryptocurrency remains extremely volatile and risky. Only invest what you can afford to lose completely, and always do your own research before making any investment decisions. Stay safe, stay smart, and never risk your rent money on crypto. Peace.